interest rates hold where they're at, I think that we'll see, and borrowing rates for federal student loans come down a decent amount from what they were the year before. So in general, borrowing costs are coming down, but it's not coming down super fast. And I've been doing this long enough to remember back in the day, variable short-term refinancing was as low, and at one point I think it was in the 1% range, because short-term federal funds rates were basically zero, and they set these variable interest rates based off of the short-term federal funds rate, roughly speaking. So if we get a recession, if we see interest rates really drop a bunch from just people fearing recessionary conditions, that could trigger a lot of people to look more closely at like refinancing their mortgage if they bought since 2022, and looking at refinancing your student loans. That said, we are seeing a ton of people refinancing student loans right now, and if a Federal Reserve interest rate cut gets your attention to check it, great. Most people, though, are not going to have to worry about this. Most people are that have very large debt-to-income ratios are going for forgiveness, and then the only impact of a Federal Reserve rate cut is really just going to be, what are you earning on your savings account? That's the biggest impact for a lot of people. And then secondarily, how much do I have to, what interest rate do I have to pay if I want to borrow for a house or something like that? So if you have any questions, put them in the comments.